We are in the session 4 of the fourth session program. It's about how all of this hard work of thinking about your future of your company through 1 year from today, tracking what you've done through Buffett Benchmark, rolls up into a better, more founder-friendly capital event. Now, I'll start at the outset. As we've already said, not everybody wants to sell their company. Some of you just want your companies to run better. Everything we've talked about makes your company run better, more profitable, more revenue, less founder dependency. I mean, that's how owners operate. And owners understand why that investment in that company that they've built is better than any other investment they could make. And so the understanding of the financial impact based on operational outcomes, the operational decisions you make based on financial outcomes is so important to be having an owner's mentality. To go back to the Warren Buffett example, you can imagine the reports that Warren Buffett sees about his railroads and his restaurants, and he doesn't need to see whether the hamburgers have gotten better or worse. He needs to see the financial impact. So the act of transitioning from operator mentality to owner mentality, irrespective of if you have a plan to go to the marketplace with your company, it's the exact same exercise. But as we roll into session 4 here, this is about turning it into a capital moment. And there's all sorts of ways to access capital now. You know, the easy one would be, I want to sell my company. Others are, I want to buy companies. I want to merge my company. I want to make my company grow faster by accessing some debt. I want to sell part of my company so that I have some capital. So the concept of accessing capital needs to be seen as much larger than just, I want to sell my company. But again, all of it is really at your discretion. The story I think Birthing a Giants needs you to know is that the capital is coming anyway. The capital is coming to your competitors. It's coming to your clients. It's coming to your vendors. The capital is changing everything. And so you need to be a capitalist. That's the word we use. You need to be an entrepreneur that understands they're building an asset, not building an operation. And that's where Birthing a Giants helps. And the What Do You Think platform helps you get there. Real quick, for those of you who want to take a screenshot of this, this is just some research and resources for you to grab. So I've been writing about a lot of this on my Forbes column. So you just Google my name in Forbes, and you'll be able to see a lot of the articles I've described. If you go to our website, you can download the 700 Days white paper, the 8 key terms white paper that we are about to talk about. And you can access the Business Owners Generative Intelligence, details about the private deal team, but Business Owners Longevity Dividend, the apps for Apple and Android. Of course, they only work if you're a What Do You Think account holder. And then my upcoming book, Swimming Lessons for Clayton. And so with that, let me take you to a different place. Give me 1 second as I switch here. And share. Okay, so what you're looking at now is the Birthing a Giants website. If this is the regular website available to anybody at birthingagiants.com. If you scroll to the bottom, all the way to the bottom, you're going to see these array of documents. And you can grab our 700 Days white paper here, which is about how you stay out of the earnout trap and basically make the same improvements to your company when you still control the company than before you go to market, so that you can capture all the value creation before you exit and create a less restrictive earnout. And this document shows you how to do that. This document here, the 8 deal points every business owner should know, I'm going to talk about that in a few minutes, but that is basically the most founder-friendly way of looking at capital. If you were to ever come across capital that contained some of these 8 deal points, it's on the journey to being founder-friendly. Of course, Swimming Lessons for Clayton. For those of you who never saw it, we have a wonderful little micro documentary on how the Twisted Sister band went through the Birthing a Giants program and exited. And you may know the Twisted Sister band as the folks behind the song, We're Not Gonna Take It. And this little micro documentary shows how they finally took it. They finally took an exit package to their business. And last but not least, for those of you who are considering joining Birthing a Giants, you can grab all the information about what's involved in becoming a cohort member for Birthing a Giants. I want to go quickly to this 8 deal points to talk about something. So you are looking at my screen. This is a free white paper you can download, but let's look at the headline to understand what we're talking about. These are the 8 deal points every business owner should know and fight for before selling their company. So what does it mean to be founder-friendly capital? Our answer is these 8 deal points. These 8 deal points cover what it means to be founder-friendly capital. And the way you do that, this report really walks through it all. But let me explain what I mean by founder-friendly capital in these 8 deal points. If you think about a casino floor, some of you are gamblers, some of you aren't, but whether there's blackjack or whether there's slots, a slot machine on the casino floor, each one of them has odds in favor of either the player or what's called the house. You can be sure that every game on the casino floor is in favor of the house. Similarly, every deal you ever do with a buyer is, if they're any good at their job, is going to be in favor of the buyer. That's just how the game is played. But take 2 games on the casino floor. One's called blackjack, and that's about 52, 53% in favor of the house. And there's something called slot machines, and that's like 75% in favor of the house. So the question is, when you go to do a deal, how close do you get to 50-50 in terms of in favor of the buyer and in favor of the seller? For those of you who think you can get a deal that's totally wildly in favor of the seller, obviously there's some dumb money out there. Maybe they'll do a deal like that, but no smart money would ever do that because they all know how to make sure the deal is lopsided in their favor, which means that as a business owner, you have to be thinking about how to make the deal as lopsided as possible in your favor and just generally set a target of splitting the baby. At least it's 50-50 in their favor versus our favor. That's what this research report is about. If you ever got a deal with all 8 deal points, you are well past normal and you're well into extraordinary in terms of a seller-friendly deal. That's what founder-friendly means. So I'll start over at the platform again till we finish this. We're going to finish on founder-friendly capital. And I'm going to show you what I've already shown you, which is update my company, the capital readiness report. I'm going to just quickly go through this now that we've been through the journey of the platform. Is you want to know how your Buffett benchmark is changing over time. And this is showing the most recent Buffett benchmark and the Buffett benchmark growth. If we click to this tab, we see more of that. Obviously, everyone wants to see their companies go up in value. This tells the story of how your company goes up in value. It tells the story of how your company went up, what you did to the company. It always tags each one as market fit or financial discipline so that you understand what you did to the company and what area of expertise or domain area that it relates back to. This is where you can build a great company by knowing what you did and how you did it. Eventually, when you build your second brain and you share it with your team, you can start to get them to start using it. It's a behavior change. Let me say the obvious. A lot of us like people coming to us because it makes us feel important, but the future is not that. The future is pushing them into a second brain where you can demonstrate reduced founder dependency. When somebody comes to buy your company, they interview everybody who works there and they find out how critical you are to the company. The more critical you are to the company, the less money they'll pay you. So the founder mode concept here in the second brain is to extract yourself from the company, push them into the second brain, push your leadership team into the second brain, and demonstrate quantitatively that you have reduced founder dependency. And all this really rolls up into the Capital Ready report, which will be eventually shared as a markdown file to a buyer of your company so that you can prove to them that you have built a genuinely de-risked business that should attract founder-friendly capital. This is how you get to the top of the founder-friendly capital stack. Remember, well, you may not know this. There are 15,000 private equity firms out there. Probably 100 of them out of 15,000 are genuinely founder-friendly. And I can tell you that the amount of people who want those private equity firms to buy them is also about 100 times greater. We are building a founder-friendly capital network for Birthing a Giants with a very simple premise, which is we will give them extremely valuable de-risked companies to evaluate. And in return, they will put our companies at the top of their review stack because we know what they know. They want you to present them with a de-risked company and they want you to document it. When Birthing a Giants' platform, what do you think? Documents it. It's real. So we are creating this middle ground between founder-friendly capital and capital-friendly founders. And it's all done on the platform. So let me share with you what all of the folks in our founder-friendly capital network, I'm talking about investment banks and I'm talking about private equity firms, all have access to. It's I'm going to go right now. You have access to this as well. I'll just show as a platform holder. I'm in the homepage of What Do You Think? I'm in my network. I'm going to go to my experts and I'm going to scroll down to private deal team. This is where you will find our AI-powered M&A team. And you can ask questions here that will get you really good, thoughtful answers about, should I accept liquidation preferences of 2x for a buyer. You can ask complicated questions like that. You can ask simple questions like, how do I find founder-friendly capital? You can ask all sorts of questions here. And this is going to basically review it by our AI-powered platform. 2x liquidation preference is generally punitive and misaligned for you. And now I think it answered my second question, finding founder-friendly capital. So you can, at any point you want, just go to the platform, my network, my experts, private deal team. The other thing that's really important to understand is that I shared with you earlier this report, these 8 deal points every business owner should know. And we took those 8 points and we boiled them into something called a private deal analyzer. And deal favorability analyzer. And when you upload, I'll show you what it looks like here. Excuse me one second. When you upload a deal to the private deal team analyzer, all you have to do, you may get an email, you might get a PDF, it might be a term sheet, it might be an indication of interest, it might be a full, agreement to sell your business. We will analyze the deal relative to those 8 deal points. Now, let me show you what it says up here. It's important. If you get 50-50, okay, if you get a deal that gives you roughly half in the seller's favor, half in the buyer's favor, you're doing very well. In fact, we call it the ideal balanced outcome. If you get a deal that's more than 50% in your favor, that's legendary. So we highly recommend, if you ever end up in a process with a potential buyer, that you upload anything they give you that has terms in it to the deal favorability analyzer. I've gone ahead and run this with a deal term sheet that I would describe as moderately buyer favorable. And it gave it a 36. And what's cool about this is you upload that term sheet or whatever that document is, and it's going to tell you where it sits on this range, you being the seller, them being the buyer. So here we are looking at the deal favorability analyzer after I uploaded a moderately buyer-friendly deal. Okay, buyer being the person you're selling the company to, you're the seller. The goal, 50-50, this moderately buyer-friendly deal is, you can see, lopsided in favor of the buyer on a scale of 50% this way, 50% this way, it's 36. And it shows you why. It explains how it's heavily buyer favorable. It breaks it down into things like purchase price, deal structure, reps and warranties. It even expands if you want to know more about why it said that this gets a 25. And you have extensive deal insight. You could always analyze another document, and you can ask the private deal team about this deal. Very, very powerful. Now, this is what I call a moderately buyer favorable deal. 2 things to know. 1, anyone in our founder-friendly network will have access to this exact same deal favorability analyzer. So for the very first time ever, you and the people you're selling to will have a shared common language. The shared common language will be based on this research report. It's based on the 8 deal points every business owner should know and fight for. And it allows you, as a business owner, to analyze a deal and see where the deal stands. Let's say you work with an investment bank or an M&A advisory firm that is in our network. Well, they'll have access to this too. Meaning, when you go to talk to them about the deal they brought you, you are sharing a common language. And you can say from the outset, my goal here is a 50-50 fair deal. Balance towards the seller, balance towards the buyer. And if they bring you a lopsided deal, everybody will know it. They'll know what you saw, you'll know what they saw. Levels the playing field. There is nothing out there on top of all the other nothing out there's that I've shared with you today about the What Do You Think platform. There is nothing out there that allows buyer and seller to talk using a shared common language around these 8 principles. We've created it. It's inside our platform. So nobody should ever consider going to market without understanding what the deal should look like before you'll sign it. That's a big breakthrough. Part of our mission to tilt the table a little bit more in favor of the business owners who have built these amazing businesses and a little less in favor of these capital providers who sometimes come in with too much swagger and not enough benefit. That's the Founder-Friendly Capital Readiness Report and the Private Deal Team Analyzer. The last thing I want to share with you before we break is called the Business Owner's Longevity Dividend. So this is very unique, but because Birthing of Giants is working with so many amazing lower middle market companies, we have insight into which are the best, which are not the best, and everything in between. A lot of that insight comes from our own work. It comes from the same founder-friendly capital report that you would share with a buyer. It comes from the Moneymakers Club, which we talked about earlier, that if you're presenting data on a monthly basis at this level, we know a lot about your company, and we can be extremely selective in who we end up offering what we call the Business Owner's Longevity Dividend to. The Business Owner's Longevity Dividend is a financial instrument. Call it a fund, just like any other fund you might sell your company to, but it is fully grounded in all 8 of these principles. Let me put it another way. We started with this concept. How do we get all 8 of these deal points to be present and in favor of the buyer and still create an investment opportunity that's good for the investors, the people who fund this fund? And we created it and we call it the BOLD, the Business Owner's Longevity Dividend. And people will say, well, how can you do what no one else can do? How can you create a deal that is fully in favor of, that has all 8 deal points in favor of the buyer? First of all, let me share with you what it looks like. When you put the BOLD term sheet into the deal favorability analyzer, it shows up well past 50-50. It is more seller favorable. This term sheet is exceptionally seller friendly. And it goes on to share with you all the detailed analysis of how we got there. Now, I'm going to show you the terms in a moment, but this is something extremely unique to Birthing of Giants. This fund is going to be available for the very best companies that go through the Birthing of Giants program. The reason we know you are the very best companies is going to be your participation in the Moneymakers Club. After all, anyone who goes through the Moneymakers Club is delivering to us extensive data every single month. We are analyzing that data. We have the same calculated ratios you do. Our ability to offer you a founder-friendly capital deal that exists nowhere else is made possible by the fact that we can watch your company over an extended period of time, 3 years or so, before we offer you the Business Owner's Longevity Dividend, the BOLD. That's the unique relationship. Anyone who came to me now and said, well, I'd like you to give us the BOLD now, I'd say, no, we need 3 years with your company. We need to understand how you handle the ups and the downs. We need to understand if you're a good steward of capital. We need to understand if you make operational decisions based on financial impact and how that's going. We need to track your Buffett benchmark. We need to know how well you've de-risked the company and how well you've applied the private equity playbook. So here we have finally closed the whole loop. You go through the program. If you do good things in it, and we offer you the BOLD, I'm going to walk you through the BOLD in a moment, but here's the real kicker. is that people who have been offered the bold will be pre-vetted for all of our other founder-friendly capital sources. Call it the good housekeeping seal of approval. If you qualified for a bold, it means you ran a good company. If you ran a good de-risked, good investment, the buyers in our network want to see you. If we work together to get you to bold level readiness, there's a lot of founder-friendly funds waiting for you. So let me walk you through the bold as we close this program out. This is the bold solution. And it is what's called a hybrid equity solution. It basically combines private equity with private debt. And it puts the two together to create an outstanding opportunity for a business owner. It's for privately held companies in the 5 to 500 million revenue range. Here's your dilemma. Most of the time, a business owner is running a company, and either they're going to give control to someone else or they're going to keep all the control. But if they keep all the control, they have no liquidity, meaning their biggest asset is their business, and their business is illiquid. And if something goes wrong, their whole business and their whole net worth can go down with it. So here you are, you're faced with giving control to someone else, but you get some money, or keeping control, but you get no money. The bold starts with, how do we get you the money and give you the control? The illiquid founder is historically forced to choose between these two, and they choose poorly. So on the operational control axis, the middle one, low to high, you've got a traditional PE buyout. You have very little operational control in the upper left quadrant. And you also have the highest liquidity. If you give up control, you get the most money. Then you go to the bottom, you have no liquidity, but you have total control. And Birthing a Giant's bold is in the upper right quadrant. It gives you operational control plus liquidity. And how do we do this? It's right because of what I said earlier. We only offer this to the companies that have demonstrated that they are great stewards of capital, that they have moved from the operator seat to the owner seat, that they view their business as an asset, not a business. The BOLD, the Business Owner's Longevity Dividend, is an operational imperative, but it's disguised as a fund. We eliminate financial insecurity. We do it through tax engineering. We provide partial liquidity at an extremely favorable tax rate for you. You gain clarity, you gain capital, you gain a partner, and you get time because you've unlocked something like 10 to 20% of the value of your business in a bold, time to make the company more valuable with Birthing of Giants assistance. So we take the binary decision you had to make, which was total control with more liquidity, or total control with no liquidity, or liquidity but no control, and we get rid of it. We obliterate it. We turn it into control plus liquidity. And so it's sometimes called the first bite strategy. It's the idea that we will invest approximately 10 to 20% of your enterprise value, and you will retain 80 to 90% of the control, and you will have day-to-day control. And you and Birthing of Giants will make your company more valuable together as you journey towards what would be called a second bite at an even higher valuation, where you get most of the upside, but you retain near total operational control during that process. That's the balance that everyone's looking for. That is the definition of founder-friendly capital. The economics look like this. Imagine a $1 million EBITDA business. Imagine at a 10x multiple. Just keep our numbers easy. You could sell today. You could sell this $1 million EBITDA business at a 10x multiple for $10 million. You're going to pay taxes and you'll have some fees, but you'll have no ownership. After you clear everything, you might have $6.5 million. If you work with Bold, you're going to take that $1 million out now. We're going to buy, let's just say it's 10%. You're going to get the full $1 million and it's tax deferred. The way we've constructed this is a hybrid private debt, private equity fund. You don't even have to, you defer your taxes on that $1 million. You're going to clear $1 million tax deferred. You retain 90% of the status. If we do the full 20%, you would take $2 million and you retain 80% of your ownership status. We work together to double your EBITDA over the next 700 days. When you're ready, as I told you, there's plenty of founder-friendly capital firms that want to work with a Birthing of Giants invested backed company. If you were to double that EBITDA from 1 million to 2 million over the next 2 years, we went back to market, even at that same 10x multiple, we can turn that business into an $11 million exit. You own 90% of it in this scenario. You're clearing $12 million before fees and transaction fees and taxes on that deal. And you've de-risked the business early. You've partnered to make the company more valuable through EBITDA expansion over the next 700 days. And you created nearly double the wealth you would have created otherwise. That's the bold that we have built that is based on the Birthing a Giants methodology. Capital ready by design, not by accident, by following the private equity playbook. We take the next 700 days to expand your multiple and reduce founder dependency on the journey towards making your business more valuable. That is the end of our presentation today, folks. So I'm going to stop now and invite you to ask any questions. But that's the whole journey. Summary: start with the private equity playbook. Get great ideas that'll de-risk your business in an environment that's friendly to you, so you can ask any question you want. Get assistance from the platform, AI experts, real experts. Make your idea better. Share it with the right people. When you're ready, pass it down to your leadership team using the handoff methodology. The platform knows them. They know you. You bring the ideas to fruition. You document those ideas through the Buffett benchmark. You dial up the value of your company through the Moneymakers Club by meeting every 90 days with our Moneymaker Club coach. Everything is tracked in the platform. Your second brain is exposed to your team so that they can reduce their founder dependency. It's all captured in the Founder-Friendly Capital Research Readiness Report. And when you're ready, you've got a fully packaged up investment. If it makes sense for Birthing a Giants to become a bold partner with you, that's our first bite. If it doesn't make sense, if you don't want to sell, if you have your own plans, that doesn't matter. We're happy with that anyway. And then you can, if you do the bold deal, you move on to the rest of our founder-friendly capital network. But even if you don't, what we're sharing with any potential capital partner is a much more compelling portrait of the business you've built. So I want to thank everyone for sharing this time with me. And I know that it's been a lot to take in. To kind of end where we started, I did in fact have a heart attack a year ago. And I did in fact see what I just shared with you a year ago. I don't really know how to explain it, to be honest. But I spent the next year building it. And we finished it about 45 days ago. And you're seeing it now. And it takes the business owner's journey, which I think has been opaque and lonely and confusing, and tries to make it the opposite of all those. Transparent, shared, and straightforward. And we're always looking for people who want to take the journey with us. Thank you.